Let's drill down now into some of the market activity we've been seeing over on that end when it comes to yesterday's performance on the markets. Kenyan shares fell yesterday as the market corrected from a two-session surge. It was triggered, of course, by last week's peaceful election and the results that eventually came through. The benchmark NSE 20 share index falling back 1.5% by yesterday's session. So that data being reflected on screen, certainly incorrect. The NSE 20 not sitting at 74.02. We've got the market at 4,911 points at this stage, and that after gaining about 7% in the last two sessions alone. Analysts saying that the peaceful outcome of the elections have given investors added impetus to buy into this market. But the legal challenge as to the result right now is could well dampen some of this enthusiasm moving forward. For now, traders are putting the activity that we saw in yesterday's session down to mere profit-taking by speculative investors, particularly where many say there's still underlying support for the Kenyan market and for demand by investors who are looking to see growth in this economy moving forward. We had shares in Equity Bank specifically standing out in yesterday's session. We've had Equity Bank, of course, the country's largest bank by customers and one of the most traded stocks on the NSE, plunging 6% in yesterday's session. It ended at 31 shillings 50. As you can see, though, on a cumulative basis for a 1 month period, that share price is up 12.5%. On the currency front, the shilling held pretty steady against the dollar in yesterday's session. Traders saying that the local unit could firm to the 85 level, helped by foreign investors streaming into the stock market after the election. We've got the local unit right now, though, at 85.42, the greenback. Remember, we've had the shilling gaining about 1% since that election results were announced, lifted by business confidence on the one hand, but then also greater activity by importers who had covered their dollar positions in the run-up to the election. On Tuesday, remember, the Central Bank of Kenya as well held its interest rate at 9.5%. So that, broadly speaking, all that's played out so far on the markets. To take a look at what's anticipated for the trading day ahead, joining us for some conversation and analysis is Alistair Gould. He's head of trading at Old Mutual Securities. Alistair, thanks so much for joining us this morning. Let's get straight into what you're making of the market activity we're seeing right now. I've outlined there a brief synopsis of all that played out in yesterday's session.
Well, yesterday the correction that we saw was inevitable. I think Monday and Tuesday's bullish run was unprecedented. It was very bullish on both days, and we definitely had to see some cooling off because the market was running away from us. So we did see quite some selling pressure on a couple of stocks, which attained prices that were very attractive to some holders in the short term. The market is up very high this year. I think in these first few months, we're definitely up about 20%. And that really questions how much more room there is for the rest of the year. And I guess that's up to investors to decide, and we will see how they choose to play it as the year progresses.
What are you making of current valuations, Alistair? Because where you say that this market has rallied quite strongly so far, leaving less room for upside movement as we progress through the rest of the year, we've had some traders saying that we could well see a further 30% being added onto this market.
Well, a further 30%, I may disagree with that. Maybe another 10 to 15. However, a few valuations are approaching target price in our opinion. So I'm not sure how much more room. We still have a full 9 months left ahead of us. There is still a few factors that are going to bring some uncertainty into the market. We have a pending court case following our election, as you mentioned. And then there will be ICC trials later in the year. And these two will definitely test the market at those times. However, in terms of valuations, some stocks are looking expensive on their 2012 full year earnings, and unless people are buying into full year 2013 earnings right now, it may it may challenge a couple of decisions around buying into some prices at these levels.
Where are you still seeing some of the buying opportunity, Alistair? Because we've come across commentary saying that you've got to actually tap into the laggards at this stage to reap any upside momentum or any further upside momentum, given the fact that we've seen this market rally, as you said, 20% so far this year.
Well, there's a few banking stocks have not really moved up as much as we anticipate, and we still see a little room within the banking sector. Outside of that, definitely in the commercial and services sector, we still have our eye firmly trained on a stock like Uchumi, who have confirmed interest to have a rights issue later in the year. We firmly believe that despite their earnings disappointment, that there is still some opportunity within that sector as the economy definitely grows this year.
We've had Uchumi certainly stealing attention ever since it's relisted on the exchange. Alistair, what do you make of prospects for this company moving forward, the kind of strategy it has in play, because there's quite a turnaround that's been seen in this company's performance?
Fantastic turnaround. I mean, it's a great story. It's a story that even a student should study in a thesis, because they were before their delisting and suspension, they were really on the wrong, moving in the wrong direction. But the last 5 years has been fantastic for them, and last year the market really rewarded them for it. Going forward, they've been very clear around a cautious expansion strategy into the region. We're seeing a lot of foreign retailers looking into this region and wanting to get in. And locally, we are seeing Uchumi and Nakumatt taking steps to expand their footprint into Greater East Africa. This will definitely expose them into a bigger market, bigger retail market. It'll reduce their reliance on Kenya alone. We still have a lot of opportunity in that sector, because in Kenya alone, I think we have about maybe 100 retail outlets. That's a very small number in comparison to bigger markets like South Africa, where you may have one chain alone having up to 2,000 retail outlets. So I think in the retail sector, we will see a lot of interest in the next couple of years, and that really gives Uchumi a good footing, given that it's the only listed one at present. We'd be happy to see more of them listed.
That's exactly it, Alistair. Very little opportunity for investors to delve into the kind of offering these retailers could potentially put on the table. There was lots of speculation as to when we could see Nakumatt come to list on the NSE. Any conversations being had at this stage about when that's looking to be more likely?
Nothing, unfortunately, nothing as yet has come concrete from Nakumatt as far as their listing. It's really been a highly anticipated company on the exchange over the last few years, but they've opted to go the private equity route a couple of times whenever they've needed financing. But it's just a matter of time before the private equity investors within the company do look for an exit, and the best exit strategy would be through the markets.